traders, this is our gold weekly review. My name is Angelo Zitis, and we start with this week's title being Bullion breaks higher once more. Gold prices were lifted to new multi-year highs during the latest sessions as risk sentiment was equally lifted due to various geopolitical matters around the globe. Some of the reasons that add to the risk sentiment include the US Sino matter, which is in a deadlock for now, and a weak global economic sentiment. On Friday, gold traded very near our 1500 round price level as traders were not ready to give up their long positions. In fact, reports released throughout the previous weekend supported the opinion that safe haven assets could be under huge demand in the following days or weeks. This was very evident in yesterday's and today's trading activity, where gold traders added more bullish positions for the precious metal. Our first point is currency manipulation. Uncertainty has increased significantly after the US president in the previous days directly accused China of being a currency manipulator. Despite the fact that the Chinese currency has been fluctuating normally, according to the IMF latest reports, it is also very difficult to confirm if they are actually meddling with the currency. Following the accusations, analysts are adding that China's main purpose could be to make a gain on a lower currency. This is something the Chinese totally deny. It also creates disbelief in the markets as market participants are divided as per what is exactly happening. Our third point is safe haven assets in check. Now, central banks like Swiss National Bank, the SNB, and Bank of Japan, BOJ, both have worries over their own currencies as they are both considered safe havens. Safe haven assets like the CHF, JPY, and gold have appreciated significantly lately and even today in the early European morning. In other words, safe haven currencies have become more expensive, and with the current fundamentals not showing any signs of improvement, they could appreciate further. SNB and BOJ may not be happy with the latest developments and the effect they've had on their own currencies. Some reports indicate that if worse gets to worse and safe haven assets continue to appreciate, these central banks may take action to decrease the value of their currencies. When central banks take actions, they usually create further uncertainty in the financial markets. Usually, investors react accordingly and take actions to protect their investments and interests as risk increases. This means traders may be moving money around to other investments to take advantage of volatility, which means more volatility for gold. Our third point is dovish outlook around the world. From another perspective, gold traders and investors are witnessing a very dovish outlook coming from the largest economies around the world. Starting with the US, the Fed already cut rates in July, and there are expectations it will cut for the second time in September. Bear in mind, prior to this moment, the Fed had not cut rates for over a decade. Furthermore, additional pressure is applied as many other central banks are in a wait-and-see position for the Fed to make a move before forming their own opinion for their own economy. Then we have the European Central Bank, which could also cut rates next month. Bank of England could also be in a difficult position as it plans to leave the EU without a deal and may be willing to cut rates and boost economic activity. RBA and RBNZ already cut rates recently. As a conclusion, even though we are not in a recession, traders get the idea that the majority of the financial markets are in a panic mode. Our advice would be to view the market with objectivity and keep a clear mind. The more you separate yourself, the more clarity you may have to trade or form decisions. Moving to our technical analysis. This is gold's 4-hour chart. Now, gold prices have pushed higher by approximately $66 since our previous report last week. It has broken above all our previous resistance levels, and those levels have all now become our support levels. Gold is currently trading very near our 1530 R1 resistance level. If gold is to break higher, it could aim for the R2 1550 level, and even higher we could see the R3 1570 level. In the opposite direction, if gold is to make a correction, it could move back to the S1 1500 round number level, and the next stop could be near the S2 1485 with the S3 1470 level being the most possible if it moves even lower. Now, please note the precious metal currently maintains an upward momentum that has formed since the end of May 2019. The RSI indicator below our chart is just above 70, which confirms an overbought bullion market. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. Thank you very much. We'll see you next week, and solid trading.